2025 ended as the weakest year for job growth since 2020, and there's another major variable to watch for 2026. What is it? Let's find out. Let's talk about something that could have a major impact on the housing market in 2026, a new Federal Reserve chair. This has a larger impact than most people realize because it influences bond markets, liquidity, risk tolerance, affordability, and buyer and seller confidence. Rick Reeder is the current frontrunner, and he comes from an asset management background. Rick will most likely focus on liquidity and capital flows, preventing financial stress from breaking the market. This matters for real estate because he may be able to step in faster when he notices shifts in the market, which could bring more stability to lending conditions. Kevin Warsh is looking like the runner-up, and he is known as someone who is less inclined to keep policy overly restrictive once inflation is moving in the right direction, which would mean stability in mortgage rates and a push towards affordability. For now, this low-higher environment is keeping the Fed on a path of gradual rate cuts. Combine that with home prices expected to appreciate in a modest 2 to 3% range, and we have a unique moment. Wages are actually expected to outpace home price growth for the first time since before the pandemic. We're also likely to see a boost from the One Big Beautiful Bill Act, which increases the low-income housing tax credit by 12%. This is expected to trigger a wave of new affordable rentals and multifamily construction. The lock-in effect is also starting to crack. Life happens. Marriages, new babies, and grandbabies are finally pushing baby boomers to move closer to family. In fact, being near friends and family is the #1 reason why people move, finally outweighing the desire to cling to a 3% interest rate. So much is happening, and while a lot depends on the next Fed chair, the market is finally moving again. Here's what we are seeing along the Colorado Front Range. Inventory is up and demand has dipped, which is exactly what we expect for December and January. However, Denver and Colorado Springs were the outliers. Denver actually saw a slight decrease in supply, while Colorado Springs saw a surprising bump in demand. Overall, our month's supply of inventory remained flat or saw a minor decrease compared to last year. Thank you guys for tuning in, and I'll catch you on the next market update.